I've been helping people move to Florida for years, and I need to tell you something that might shock you. The Florida housing market everyone's been talking about is about to flip upside down. Take Northport, which just dropped 10.3% from April 2024 to April 2025. That's not an isolated case either. I've got data showing 10 specific cities, including Fort Lauderdale, Tampa, Jacksonville, and Cape Coral, where home values are about to drop significantly in 2025. Now, if you're thinking about moving to Florida, this information in this video could save you thousands or help you find that perfect opportunity. But first, you need to understand what's really happening behind these numbers. I'm Gino Santa Rosa from North to South Realty, and thank you for joining the program once again. And I appreciate you with all the support you've been giving me lately. So please click subscribe and hit that bell to stay up to date with all my latest videos. On this channel, we talk all things South Florida and relocating here to the Sunshine State. So if you're thinking of moving to the Sunshine State, hit me up. My number is 561-871-1889. And if you see the QR code at the bottom of my screen, make sure you scan it and get a free copy of my South Florida Black Book with all the greatest neighborhoods to invest in. Now back to the program. The market flip nobody saw coming. Now, while everyone's been talking about Florida's crazy high prices, something big just happened that changed everything. The market most people thought was unstoppable hit a wall in late 2024. I'm talking about a complete shift that caught buyers, sellers, and even some realtors completely off guard. Here's exactly what happened. Now, for years, Florida homes were selling with multiple offers, bidding wars, waived inspections, and payments way over asking price. That was the Florida market everyone knew and expected to continue forever. But then everything flipped. Homes started sitting on the market longer. The frantic multiple offer situations became quite rare. Now, buyers suddenly had choices again. Median days on the market increased notably, easing seller leverage. When homes take a little bit longer to sell, that's not a small change here. But here's the shocking part that most people missed. Florida's housing inventory jumped to 4.7 months supply in January 2025. Now, you might be thinking that sounds like a lot, but a balanced market is actually 6 months supply. This means Florida went from a crazy seller's market to getting close to balanced conditions. Now, the Federal Reserve played a huge role in creating this perfect storm. 3 Fed rate cuts in late 2024 lowered borrowing costs dramatically. Most buyers and sellers didn't see this coming or even understand how it would affect the market. The rate cuts were supposed to help the economy, but they created complex effects on housing that nobody predicted. Now, if you listen to Benjamin Cohen, he actually states in one of his videos that the rate cuts don't necessarily affect mortgage rate cuts. So there's two different things here. The Fed cuts rates, but that does not affect mortgage rates. It's actually the opposite. If you look at the past history, he says Fed rates cut the rates and the mortgage rates actually go the other way. And that's just a proven fact. Now, these rate cuts should have made buying easier, but the market was already changing at that time. Now, some sellers held 2023 price expectations when they were selling, leading to longer time on the market. Buyers who expected to compete with 10 other offers found themselves with more negotiating power than they'd had in years. So now, here's what's really interesting about this market flip. Correctly priced homes are still selling fast. I'm seeing well-priced properties go under contract in 2 to 3 weeks. But overpriced homes are sitting on the market for months. Now, the real difference here between a home priced right and one that's too expensive is night and day. Basically, a clear divide between smart sellers and stubborn ones. And I can tell you, there's a lot of stubborn ones out there. Smart sellers price their homes based on current market conditions and recent sales. They're still getting good prices and selling quickly. While on the other hand, stubborn sellers who want 2023 prices, for example, are watching their homes sit empty while carrying costs pile up. At the same time, the difference between choice neighborhoods and average areas is becoming more obvious too. Average neighborhoods that saw huge price jumps during the pandemic are actually seeing the biggest corrections now. Some cities are handling this transition way better than others, and the cities with strong job markets, good infrastructure, and diverse economies are staying more stable. But other cities that relied heavily on speculation and investor buying are seeing dramatic changes. This market rebalancing is creating the biggest buyer opportunities we've seen in years. More inventory means more choices. Longer time on the market means less pressure to make quick decisions. Sellers who need to move are more willing to negotiate on price and terms. But to understand which cities are about to crash, we need to look at the warning signs that separate the stable markets from the ones heading for trouble. Now, if you want to set up a meeting with me one-on-one to find out what areas are best, maybe for you and your family, contact me today by clicking on the calendar link below. Let's set up a one-on-one meeting. My number is 561-871-1889. Let's talk Florida real estate. Now back to the program. But to understand which cities are about to crash, we need to look at the warning signs that separate the stable markets from the ones heading for trouble. And there's one factor that's hitting Florida harder than anywhere else in the country: the insurance crisis that's breaking Florida. Now, property insurance costs are destroying Florida's housing markets in ways most people don't even realize. This isn't just a small increase we're dealing with here. Now, Florida insurance premiums are hitting levels that are pricing out qualified buyers across the state. Florida is getting hit harder by rising insurance costs than anywhere else in the country. There are insurance companies now, these days, as of 2025, that are actually bringing their prices down to avoid all of this mess. If you want to learn more about which insurance companies are giving discounted rates, hit me up at 561-871-1889 and I can give you some tips. Now, the numbers are quite shocking here, and some areas saw premiums quadruple over 5 years. That's not a typo. We're talking about insurance costs that have increased by 400% in some parts of Florida. Now, when I help clients move here, insurance costs are now one of the biggest surprises they face. These insurance premiums are now so high, they're pricing out qualified buyers who can afford the mortgage but can't handle the total monthly payment. So make sure when you're purchasing a property to check out the insurance rates. Now, think about this. A buyer might qualify for a $400,000 mortgage payment of $2,500 per month. But when you add insurance that can add $600 to $1,000 monthly, that same buyer can no longer afford the home. The insurance costs alone are pushing people out of the market. Now, let me give you a specific example of how this affects monthly payments. A $400,000 home that used to have a $200 monthly insurance cost might now have $800 monthly insurance costs at this present time. Now, that's an extra $600 a month or $7,200 a year. Now, for many buyers, that extra cost is the difference between qualifying for a home and being priced out completely. And on top of that, post-Surfside safety rules forced HOAs to raise fees and assessments. Now, the Surfside condo collapse in June 2021 created a ripple effect that's still hitting the market today. Florida put new structural safety regulations in place after the Surfside collapse. These rules require more frequent inspections and force condo associations to set aside more money for repairs. This means Florida HOAs are hitting residents with huge special assessments and raising monthly HOA fees to cover these new costs. Then you have Hurricane Ian. Ian's $113 billion damage drove up premiums and reduced insurer capacity. Now, that particular hurricane didn't just damage homes when it hit in September of 2022. It damaged the entire insurance market. Insurance companies had to pay out massive claims, and this created lasting disruptions in the insurance market that we're still dealing with today. Areas like Cape Coral and Punta Gorda got hit especially hard. The insurance crisis is so bad that some insurers are reevaluating Florida exposure, leading to coverage challenges. Insurance companies are looking at Florida's hurricane risk and increased payouts and deciding they can't operate profitably in this region. When insurance companies leave an area, the remaining companies can charge whatever they want, and this creates a situation where some areas become nearly impossible to insure at reasonable rates. Now, this connects directly to why condos are falling in price across Florida markets. The combination of higher insurance costs, new regulations, and special assessments make condo ownership much more expensive. Buyers are avoiding condos because they're worried about all of these surprising costs. This is creating a situation here where condo prices are dropping while single-family homes stay more stable. And the areas seeing the biggest condo price drops include Punta Gorda, Northport, and Cape Coral. These markets got hit hard by Hurricane Ian and are now dealing with the insurance fallout. And then you have the older coastal condo buildings that are getting hit the hardest because they need more repairs and face higher insurance costs. But here's the thing about this insurance crisis. Smart buyers who understand insurance costs can find deals in areas others are avoiding. While most buyers are scared away by the high insurance costs, informed buyers can use this knowledge to their advantage if they know when you combine high insurance costs with other market pressures, you get dramatic price drops that catches everybody off guard. At the end of the day, there's all kinds of price hikes. HOA valuations are going through the roof. There's the 40-year recertifications that are bringing HOA fees through the roof. So if you're looking for a building that has already paid their 40-year recertification program, contact me today and avoid all of those high costs. My number is below. Back to the program. Number 4, Northport's 10% price drop reveals the pattern. Northport became the perfect example of what happens when all these market forces collide. Northport, Florida experienced the steepest decline in home prices among all of the U.S. cities. Northport's median fell from $477,000 to $427,000, which is a 10.3% drop in 1 year. Now, this isn't just a small market correction. We're talking about homeowners losing nearly $50,000 in equity in 12 months. Now, when you see a drop this dramatic in a single city, it tells us something bigger is happening. Northport's rapid pandemic gains, storm damage, and insurer pullback triggered a steep correction. The 10.3% decrease is just the beginning of a larger trend that's spreading across Florida. The same factors that crushed Northport's market are now showing up in other cities. Several specific factors made Northport vulnerable to this crash. Now, the city saw massive price increases during the pandemic housing boom. Home values jumped so fast that they became unsustainable for the local economy. The rapid price appreciation during the pandemic created an environment where any shift in supply and demand could lead to significant price declines. An investor pullback hit Northport particularly hard. Now, this cooling migration pattern also affected demand. Fewer people were moving to Northport from other states, which reduced the buyer pool significantly. The pullback of investors here, coupled with a slowdown in new residents, reduced the number of potential buyers. This decrease in demand put downward pressure on home prices. Northport went from having multiple buyers competing for each home to having homes sit on the market for months. And then you have the fixer-uppers that are depreciating faster than move-in ready homes. This trend shows that buyers are becoming more cautious as the days go by. They don't want to deal with repair costs on top of high insurance premiums. Properties that need work are sitting longer and selling for less than comparable homes in good condition here. Now, this reflects a shift in buyer preferences and market dynamics. People are less willing to invest in properties that require significant repairs. They actually want homes they can move into without additional expenses. This selectivity is driving down prices for homes that need work while keeping prices more stable for turnkey properties. This mirrors downturns in other Florida metros like Cape Coral and Punta Gorda, also hit by Ian and insurance hikes. Cities that relied heavily on speculation and investor buying during the pandemic are the most vulnerable. Areas with strong local economies and job markets are holding up a lot better. But cities that saw their prices driven up by outside money are now seeing those prices come back down to earth. The higher cost of homeowners insurance, driven by increasing threats of severe weather, natural disasters, has made the situation a lot worse. Insurance companies are either raising rates dramatically or pulling out of certain markets entirely. Now, this creates a situation where qualified buyers simply can't even afford the total monthly costs. Northport's crash is a canary in the coal mine for other Florida cities that are showing similar warning signs. The data reveals a clear pattern of which markets are most at risk. Don't forget to hit that bell, stay up to date with all my latest videos, and please click subscribe. Thanks for watching. Now back to the program. The 10 cities about to experience major crashes. Now, I've analyzed data from multiple sources, and these 10 Florida cities are showing all the warning signs of a major price drop. The complete list includes Fort Lauderdale, Tampa, Jacksonville, Sarasota, Ocala, Port St. Lucie, Cape Coral, Fort Myers, St. Petersburg, Lakeland, and Osceola County. These aren't random picks though. Each city shows clear data pointing to significant price corrections here in 2025. Some of these cities already have 30% of listings with price cuts. Northport saw 30% of listings price reduced. Tampa 29.3%. Then you have Cape Coral at 28.2%, and that's not normal market activity. When 3 out of every 10 homes for sale have reduced their asking price, it tells you sellers are getting desperate. The competition between sellers is driving prices down faster than most people realize. Let me give you the specific statistics for Tampa, Cape Coral, and Jacksonville because these numbers are quite shocking. Realtor.com data shows Tampa has 29% of listings with price reductions. There are 19,310 homes available right now, which represents a 32% rise in inventory. The median price is $410,000 and homes spend about 58 days on the market. A Reventure Consulting spokesperson noted that investors are liquidating properties and taking a 20% loss from their initial purchase price. That's huge. Jacksonville shows 28% of homes have reduced prices, with inventory up 35% to 9,676 listings. The median list price is $399,995 and homes average about 57 days on the market. Data presented in a Reventure Consulting video indicates that prices in Duval County, on the other hand, are 26% overvalued compared to their long-run norms. Now that's a massive overvaluation that has to correct itself. Cape Coral shows a similar trend, with 28% of homes seeing price cuts. Listings rose 41% to 14,580, and the median price is 435,000. Homes in the area are taking a lot longer to sell, with about 81 days on average. Cotality flagged Cape Coral for a 6.5% April 2025 drop, with prices back to levels seen in the spring of 2022. Now, these particular cities are more vulnerable than others because they share common risks. What are those risks, you ask? Pandemic-era spikes, investor oversupply, rising insurance, and weaker job markets. They experienced the most extreme price increases during the pandemic. They have high concentrations of investor-owned properties, and they're dealing with serious insurance cost increases. Here's another note. They also have weaker local job markets compared to cities like Miami or Orlando. The inventory surge in each city ranges from 28% to 65% increases year over year. Fort Lauderdale inventory jumped 45%. St. Petersburg inventory rose 42%. Lakeland experienced a 51% surge. Ocala inventory increased 47%. And Port St. Lucie saw a 35% increase. When inventory increases this fast, prices have to come down at the end of the day. It's just common sense. The rapid pandemic-era price increases created current correction vulnerability at the end of the day. Now, Florida home prices surged 51% in total between March 2020 and June 2022. Cities that saw the biggest increases during that time are now seeing the biggest corrections. They say what comes up must come down at times, and here we have it. Port St. Lucie home prices are overvalued by a whole whopping 41% according to current data. And the Reventure app's price forecast score for Port St. Lucie ranks it at 37 out of 100, indicating downward price pressure. Now, each city is different, and they have unique factors that contribute to their crash risk. Tampa and Jacksonville have oversupply from new construction. Let's get into those risks right now. Tampa and Jacksonville have oversupply from new construction. You got Cape Coral and Fort Myers that are still dealing with Hurricane Ian damage and insurance issues. Lakeland has massive inventory and builders developing a huge pipeline of homes. Home values in Lakeland actually are down 2% month over month in Polk County. Port St. Lucie faces high housing inventory and lengthy market times. Then you have Ocala. Ocala has limited job growth over there and an aging population. St. Petersburg has oversupply in the condo market. Fort Lauderdale has investor pullback and affordability issues for local buyers. These cities represent both the biggest risks and biggest opportunities for smart buyers. If you're looking into buying in Florida, these markets offer the most potential for negotiation and deals. If you're looking for a realtor in any of those markets, contact me and my team here at North to South Realty. My name is Gino Santa Rosa, and thank you for joining me on this program. My number is below. Back to the program. But one thing you need to understand here is what you're getting into before you make an offer. The falling prices that have everyone worried might actually be creating that perfect storm for buyers who know how to navigate in this market. Number 6, why this creates the best opportunity in years. Now here's what makes this different from other market downturns you might have heard about or experienced. The price drops we're seeing in Florida aren't the start of a devastating market crash. On the other hand, this is a healthy market correction that's creating opportunities we haven't seen in years. Experts predict modest dips but no broad crash, with national forecasts of about 3 to 4% year-over-year growth. This market correction is different from a devastating crash because Florida's fundamentals remain quite strong. We're not dealing with massive job losses or economic collapse here. We're seeing a rebalancing after years of unsustainable price growth. This is only normal. The difference is huge when you actually understand what's really happening. Now, Florida's underlying strengths mean this is a gentle correction, not a collapse. So calm down. The state's population is still growing. Jobs are still being created. People are still moving here from other states. The demand for Florida housing isn't disappearing. It's just cooling down to more normal levels after the pandemic buying frenzy. Population growth and economic drivers will fuel a gradual rebounding starting in 2027. Florida Realtors projects 25 million plus residents by 2030. That's millions of new people who will need places to live. The state's economic growth continues to attract new businesses and workers, and these factors alone create constant upward pressure on housing demand. The projections for prices reaching $470,000 to $500,000 by 2030, showing the long-term opportunity. Even with current price drops, buyers who purchase now could see significant appreciation over the next 5 years. The key is understanding this is a temporary correction here, guys, not a permanent decline. With 28 to 41% inventory rises, Buyers can negotiate credits or rate buy-downs, so now's the time. When you have more homes to choose from, you can be more selective. You can negotiate on price, closing costs, and repair credits. Sellers who need to move are willing to work with serious buyers. You can't imagine how many times I see a listing that says broker's remarks. Sellers are motivated, because they are. Come in now, this is the time to make an offer. If you want to set up a time in my calendar, please click on the link below and let's talk. This negotiating power is something Florida buyers haven't really experienced in years. The end of multiple offer situations benefits serious buyers who want to make smart decisions. You can take time to properly inspect a home these days. You can get multiple bids for repairs. You can negotiate based on what you find during that inspection period. This removes the pressure that forced buyers to make rushed decisions during the crazy seller's market. Sellers are accepting contingencies they wouldn't even consider 2 years ago at this time. You can get longer inspection periods to thoroughly check that property. You can negotiate for the seller to pay closing costs or make repairs. Some sellers are even offering to buy down your interest rate to make the deal work. The National Association of Realtors projects that 30-year mortgage rates will stabilize around 6% in 2025 and into 2026, per NAR chief economist. Now, this means you don't need to wait for rates to drop significantly. If you're ready to buy, the current market conditions are pretty favorable. Waiting for lower rates might mean missing out on better home prices and selection. The combination of more inventory, less competition, and motivated sellers creates ideal conditions for buyers. These days, you can find homes that were actually overpriced 6 months ago, priced more reasonable today. You can negotiate terms that favor you as a buyer, as I just mentioned. You can take time to make informed decisions without all the pressure from competing offers. This year, it's shaping up to be the best time to buy Florida real estate in years. The market correction is creating massive opportunities that won't last forever. Smart buyers who understand this temporary adjustment can position themselves for long-term success. But you need to know exactly how to take advantage of these conditions, and that's what I'm here for. Again, contact me today, and if you want a free copy of my magazine, I call it the Black Book, with all top places to invest in, please scan that QR code. Back to the program. Number 7, your strategic advantage in the new Florida market. Now, the market conditions I've outlined give you specific advantages you can use right now. The key to success in this new market is knowing how to identify correctly priced homes that will still sell quickly. Focus on homes within recent sale price range in the last 90 days. These properties get multiple showings and offers within the first 2 weeks. Avoid homes that have been sitting on the market for more than 60 days unless there's a specific reason. Now, if you're really savvy, you can start hitting up those homes that have been sitting on the market for over 60 days. At the end of the day, those sellers become really desperate, and that's when we start negotiating. Areas that saw 60% to 80% price increases during the pandemic are seeing the biggest corrections at this present time. Now, these neighborhoods relied heavily on speculation and investor buying, and especially from out of state. Now, as mentioned, your negotiating power in this new market environment is stronger than it's been in years. Let's look at Pensacola. Pensacola buyers see seller credits for rate buy-downs. At the end of the day, you can use increased inventory to your advantage when house hunting by being selective about location and condition. You can compare multiple properties in the same neighborhood. Take time to research each home's history and recent price changes. Look for homes that have been maintained well and don't need major repairs. The increased inventory means you don't have to settle for a house that's just okay. Timing strategies differ for different types of buyers and budgets, but first-time buyers should focus on getting pre-approved and having their down payment ready. I can't stress that you should be ready before you make an offer and be pre-approved. Cash buyers have the most negotiating power these days, and investors should look for properties that need cosmetic work but have solid structures. Spot the warning signs of overpriced listings by looking at days on the market and price history. Homes priced above market value sit longer and eventually get price reductions. Research comparable sales in the area within the last 90 days and be wary of listings that seem significantly overpriced compared to similar properties. I can help you identify correctly priced properties and negotiate effectively in these markets. A good agent like myself knows which neighborhoods are stable and which ones are experiencing corrections. So I'll do all the legwork for you. Contact me today and I'll get you the right approach where you can turn current market challenges into your biggest advantage. In conclusion, smart buyers understand that timing matters more than perfect conditions. Florida's market has shifted from low inventory to balanced levels, and buyers now have leverage. If you act strategically, you can secure favorable deals. The cities I've covered show clear patterns. Some are experiencing healthy corrections that create opportunities, while others face deeper challenges that require careful evaluation. Now, the key here is knowing which markets offer the best value and which ones to avoid. If you're ready to make your Florida move, I'm here to help you navigate this transformed market. Thanks for watching, guys. Your dream home is just one call away, and if you don't mind, click on the next episode right here on the screen to watch more. Thanks for watching. God bless.